This one candle will retire your family. Step 1. Jump to the 1 hour time frame. Now wait for the 8 a.m. 1 hour candle to come to a close. Step 2. Draw the high and the low of that 8 a.m. candle. We want price to turtle soup one end of that range to then target the opposing end. We want to wait for price to close beneath that fair value gap and then use it to continue pushing prices to the opposing end of the 8 a.m. range. Let's see what happens. The validation of both the order block and the iFVG is the entry short. Stop loss going to those swing highs and final take profits going down to those 8 a.m. lows. Now let's see what plays out. And just like that, final TP was hit.
I think it's absurd to use the word turtle soup. Why would you use this? Anyways, we have coded this strategy, turned it into a trading bot some time ago, but just a simpler version. Instead of the iFVG, the order block, the higher time frame stuff, we just used the breaker structure. And actually, it was doing pretty well. It was very, very profitable, as you can see here on this equity curve. But then a lot of ICT fans from the Southern Asian country of India told me, sir, you need to use the iFVG, the FVG, the higher time frame PD array. You need to use them. They pressured me. And I knew it's not gonna make a positive difference, but I did it. We did it. I actually paid a student of our academy to do it for coding this with the iFVGs and all this stuff. And now let's have a look at how the exact strategy performs. All right, here's how it works. This is the candle from 8 to 9. We are on the 1 minute time frame. Now we have to wait for a sweep of either the high or the low. And also we have a higher time frame PD array or the block, however you want to call it, above price. So we want to have a reaction there or target this as liquidity. The low has been swept and now we need to wait for an iFVG and an order block. Here we have it, order block, iFVG, enter the long, targeting the opposite side of the range, or in this case actually this order block, and it's a win. Perfect. But now let's have a look at the performance, because according to your logic, the more iFVGs and order blocks and PD arrays you put into a strategy, the better it is, right? That's what you think, that's what they teach you. So here's the performance of the strategy over 1 year. As you can see, we have a big enough sample size, and yes, it is profitable, but it has a horrible equity curve, and the win rate as well as the profit factor are much lower than in my version that I made that is much simpler. I think this should be the final proof that FVGs and iFVGs and PD arrays and all this complicated stuff doesn't increase the profitability of your trading. Not at all. In fact, it only makes it more complicated. Now, if you want to have access to both of these strategies, including full source code, so you can see yourself that what I'm saying is actually true, that your iFVGs are nonsense, then just comment the word strategy and I'm going to send you a link to our free WOP where all these strategies are. Thanks for watching. Peace out.